Welcome back to my channel, Miss Personal Finance, where we are budgeting our way to financial freedom. This video is going to be part of my adulting series where I talk about financial advice or financial mistakes that I've made in the past and essentially things that I wish I would have known as a teen or young adult first starting out. In the previous video, we talked about what a W-4 is and how to fill that out, and as it pertains to your tax withholdings. And in today's video, I wanted to go over the W-2. And essentially a W-2 is a wage and tax statement, and it pretty much is a summary of what your employer has paid to you in gross earnings throughout the year, and also what they have withheld in federal taxes and other withholdings. So we'll jump right in. Now a W-2 can look like this. It can look like smaller, where you have multiple on one page, and they can have different copies. But essentially on your W-2, what you're looking for is your total wages, tips, and other compensation. So in this example, let's say for the year you made $30,000. Now your Social Security wages and Medicare wages and tips may be different from wages, and that is the difference between taxable income and non-taxable income. So income that isn't taxed won't be reflected in the Social Security or Medicare wages. So this number in box 1 may be different from 3 and 5. Now, for this example, we'll say that all of the income was taxable, so they're all going to show 30,000. Okay, so again, 3 and 5 may be different from 1, but for the most part, it is common to see the same amount in boxes 1, 3, and 5. It just depends on the pay structure and how the company or the employer pays funds to its employees. Now, the importance of this form is kind of going back to the W-4 and how they're tied together, and it's going to be in box 2. So the employer, when you first start the job, has you fill out a W-4, which is them asking you how much you would like for them to withhold from your taxes. Now, depending on your tax filing status, like married or single, that will determine what tax bracket you are in and how much taxes would be owed at the end of the tax year. So in this example, let's say you have a tax rate of about 15%. So that means they will take out or withhold $4,500 for the year out of this $30,000 for you and pay it directly to the government, to the IRS. So when you go to file taxes, you'll see that you've already paid $4,500. So if you've paid too much, you'd receive a refund. And if you didn't pay enough, you would receive a tax bill or tax liability that you'd be responsible for. Now, these other fields are just the Social Security tax that's taken out and the Medicare tax that's withheld. Now, for the Social Security tax rate, that is at 6.2, I believe. So 6.2 times 30,000. Oops, that's definitely wrong. So 30,000 times 6.2. So you'd be paying about $1,800 for the year in Social Security tax, and the Medicare tax rate is 1.45. So we'll have 30,000 times 1.45. So they'd be taking just $435. So the reason I wanted to bring up boxes 2, 4, and 6, the only amount that counts towards your income tax or your federal taxes is going to be the $4,500. So you're not adding these 3 up. You're just taking the number in box 2. And after you complete your taxes, it will tell you what your total tax liability was for the year. And hopefully this number in box 2 covers whatever that tax amount is. Now, again, if you've already paid over the tax amount, then you would receive a refund. If you haven't, you would receive a tax bill. You'll see that the other information will be filled out by your employer. It's pretty self-explanatory. Your employer's name, address, their control number, your information like your name and address. And if you have any state taxes, if you live in a state with no state taxes, that will be left blank. But if you also have to pay state taxes, that will be collected as well. Okay, so just a recap, your W-2 will show the amount, this in box 2, that the employer has paid already on your behalf in taxes from your paycheck each pay period. Now, what's scary is if this says 0 taxes withheld and you actually owe taxes. That means you completed your W-4 to either be exempt or take out no taxes. And unless you're receiving a refund, I would not recommend that. That means you would owe whatever the entire tax amount is for that previous year. It would be good for you to just have them withhold the federal tax amount that is equal to what you'd be owing for that year. Now, we also spoke about a 1099. What if you work for a company or an employer, but you're not truly an employee, meaning you don't have the standard benefits and you essentially work as an independent contractor for them? Then you would receive what's called a 1099 NEC, non-employee compensation. So even though you work for that company, just think of yourself as a small business or entrepreneur, self-employed, where you're contracting out your services to that company. And that's why 1099 workers are usually paid more in gross income, simply because they don't have all of these taxes withheld from their paycheck. They are responsible for doing that on their own. They are responsible for withholding and paying those taxes, those federal and state taxes, on their own. So yes, they may get all of their income or majority of their gross income, but they still have to account for those taxes. And if you don't do that, you'll be in for a rude awakening come tax season. So the same thing, it'll have the employee and employer information, the amount that they made for the year. So you'll see the same $30,000 for this example. Now, federal tax withheld, you will see that say 0 very often. Now, there's a small percentage of 1099 workers that do have the option to have their federal income tax withheld by that employer, even though they're not technically an employee, but you don't see that often. So you always want to look at box 4 as a 1099 employee, because that's going to let you know that, hey, this is what was withheld and you owe the entire tax amount if this number is 0. Super, super important if you have any side gigs, any side income, whether that's YouTube income, DoorDash, Lyft, Uber. Those are all 1099 positions where you're getting all of the funds up front and you are responsible for paying the taxes at the end of the year. So these are, again, things I just wish I knew a little bit sooner and wish I knew the difference. So for this case where you have your W-2, you'll see that although they made $30,000 for the year, the employer withheld their $4,500 in federal taxes, and the government took the $1,860 for Social Security, and they also took a additional $435, and that's not even including any additional, that's not including any additional deductions that may have been found on their paychecks. So that is the difference. Whereas your 1099 employee probably got the whole $30,000 or very close to it, but they're responsible for taking out or carving out that tax amount on their own. Okay, so that's the difference between your W-2 and your 1099 NEC. There are different types of 1099s that are not directly related to an employer. So it's kind of like a catch-all, like a 1099 miscellaneous, where you can put any additional forms of income that don't fall under a traditional worker employee-employee relationship. Okay, guys, that's all for this video. I hope you found it helpful. If you have any questions, just go ahead and leave it down in the comments. Don't forget to like and subscribe. And remember, whatever you put your energy and your focus toward, you're bound to see progress.